Have you ever heard the phrase tax advantaged account? Well, you probably have because I mention it a lot. And just in case you don't know what that is, we're going to discuss it today. And I'm going to tell you everything that you need to know about what the term tax advantage account means. And the short answer to that is any account that you can put money in that saves you money on your taxes. That is a tax advantaged account. And that's it. That's the end of the video. Okay, no, it's not really the end of the video. There's a lot more to know about it, but I'm going to try to explain it the best I can and as simple as I can because you need to know the different kinds of tax advantage accounts. So the first tax advantage account that I want to talk about is tax exempt. So what tax exempt means is that you are taxed now and you are not taxed later. So if you are taxed now and you're not taxed later, that is the kind of account that you would want to use if you anticipate that your taxes are going to be higher later than they are now. So that is when you would want to use a tax exempt account. So you pay taxes now and you don't pay taxes later because you expect your taxes to be lower now than they are in the future. On the complete opposite side of the spectrum, another tax advantage account type you have is what's known as a tax deferred account. So with a tax deferred account, you don't pay any taxes now, but you actually pay taxes later. And the reverse is true is when you would want to use this type of account. If you expect that your taxes are going to be higher now, then you should use a tax deferred account and defer paying taxes now. Don't pay taxes on a certain amount of money now, whatever amount of money you put into that account. And then later when you go to withdraw that money, that is when you'll pay taxes on it because you expect that your taxes are going to be lower in the future. Those are the two main types of tax advantage accounts. But there is one highly kept secret that can be used to supercharge your wealth because there's one like super account that can pretty much do both at the same time. And you're going to have to stay until the end of the video to learn what that account is because there is so much more to come. But first, let me just say, if you are enjoying this particular video so far, please give it a thumbs up, give me a like. I really appreciate it and it really helps me out. While at the same time, if you want to become a master of your cash flow, every single week I am putting out new information on personal finance, and I would really appreciate it if you subscribe to the channel because I know that there's something that I can help you with. But let's get back to the main video. So you need to keep in mind that when I'm talking about a tax advantage account, you need to differentiate the meaning between account and investment. So an account is just a place where you can store money. Theoretically, say for example, in a tax advantage account, you could just put cash there and never invest in anything, and it's just in an account. Whereas you can also have what's known as a tax advantaged investment, but it doesn't necessarily have to be in a tax advantaged account. So any kind of investment that offers you tax savings, that would be a tax advantaged investment. But for the sake of this video, we are just talking about the actual accounts that can save you money on your taxes, whether it be now or later. First, getting back to the tax exempt, because a tax exempt, that is where you pay taxes now and you don't pay taxes later. So a good example of that would be a Roth IRA, a Roth individual retirement account. That is a tax exempt account. At the same time, you have a Roth 401k version. That is another good example of that, which is basically just a Roth version of a employer-sponsored retirement account. Now with the other example, with the tax-deferred account, a good example of that would be the traditional IRA or a traditional 401k. Because with the traditional accounts, you defer your taxes now and you pay taxes later. So those are tax-deferred accounts. But you also have accounts that are not tax-advantaged at all. Now, just because an account is not tax-advantaged doesn't mean it's not a good option for some people. So a good example is that would be just an individual brokerage account, a regular investment account that you open up, maybe at an online broker. I myself use Fidelity Investments. A lot of people love to use Vanguard, Charles Schwab, whatever your choice may be. If you have a regular individual brokerage account at one of these places, then you could potentially not have any tax advantages. Like you won't get a tax advantage either when you put the money in the account or when you take it out or while it's growing. So that would be just a regular account. And generally we call that either like a taxable account or just an investment account. Now the difference with one of these accounts is that the money that you put in is already taxed. And then while it's invested, the money grows and pays taxes. So if you realize a capital gain within that account, you're going to pay taxes on it. If you get a dividend from that account, you're going to pay taxes on it. If you earn any interest in that account, you're going to pay taxes on it. However, while the money is in that account, you don't have to repay income taxes on that amount. Say if you withdraw the amount, you only pay taxes on any amounts of gains that you realize within the account. And now for the really secret big wealth builder, probably the best account, because you are able to save money on taxes when it goes in, while it's in there, and when it comes out, possibly. And this super secret account is actually known as a health savings account or an HSA. Maybe you've heard of it. Because in order to have an HSA, you have to have a high deductible healthcare plan. And so your deductible for your health insurance has to be at or above a certain threshold before you can become eligible to put money into a health savings account. And so with the health savings account, when you put money in, you get tax-deferred contributions. So you put a certain amount of money in your HSA, you don't pay income taxes on that amount that you put within the HSA. And then while it's in the account, you can invest in something, and then if you make any gains on those investments, you don't pay any taxes on those gains while they're in the account. And here's where the real magic happens, because when you withdraw for medical expenses, for qualified medical expenses, the money that you withdraw, you don't pay any taxes on it, as long as it is qualified medical expenses, no matter what your age is. So that's the power of the HSA, because at one point or another, we're probably going to have some, medical expenses, right? And you can use those funds in order to pay for them, tax-free in 3 different levels. But there's also another benefit to the HSA, and that is once you reach a certain age, you can actually use it for other expenses without paying any kind of penalties or anything. But then it's treated as a traditional IRA where you just withdraw the money, and if it's not for a qualified medical expense, then you'll just pay income taxes on that withdrawn amount. But if it is for qualified medical expenses, then no taxes and no interest, no fees, anything like that. So the HSA really is the super account of tax advantage accounts. And speaking of gaining an advantage, one advantage that you can do to gain in your financial life is watch this video that I created. It is called How to Achieve Financial Independence in 10 Years or Less. And it is basically a blueprint to becoming a master of your own cash flow. So if you haven't watched that video already, you definitely need to watch that video. And thank you so much for watching this video. Don't forget to like and subscribe. I'm Zach from OnCashFlow.com, and I hope to see you next time.